Welcome to Financial Repression Authority's Roundtable Insight, where the best fund managers, economists, and industry leaders discuss the key investment issues and challenges in the current macroeconomic environment.
Hi, welcome to FRA's Roundtable Insight. This is Richard Benuli. Today we have Judd Hirschberg. Judd is president at White Wave Trading, a trading company and our partner for trading research consulting services at Cedar Gold. He has run proprietary trading groups. He has 47 years of trading experience. He's developed awesome indicators and a repeatable process-based approach for trading the financial markets. Prior podcasts with Judd have focused on his approach and methodology. Today, we would like to understand what Judd is currently seeing in the financial markets across asset classes and jurisdictions. Welcome, Judd.
Thank you, Richard. It's a pleasure to be back.
Great. I thought we'd begin with a short-term view. There's been a lot of uncertainty in the short term due to the upcoming U.S. presidential elections. What are your thoughts on the markets? Are they giving any indication on who may be leading or likely to win? And what are the expected scenarios on the market's behavior depending on who wins?
Well, in the lead up to this, we've seen a lot of sector rotation. The last few weeks, all the solar names were on fire. And again, I think First Solar just announced their earnings, and I think they're up 10 or 15% after hours. This is going to be one of the themes going forward here in a Biden administration, with China announcing that they want to go. They want to be carbon neutral by 2050. Europe wants to go that direction. A Biden administration will certainly build out that type of infrastructure. So I'd be looking at definitely solar. The indices themselves, there's been so much stock rotation. Everybody's been in and out of the FANG names, Zoom, Amazon, Google, Apple, Microsoft. Basically, I've called that the COVID lockdown trade, where those are the companies that have done exceptionally well because they're the entire market now in those certain spaces. The indices themselves, as to how we're going to trade out, are muddled for me, and I'm going to show you right now why.
Sure.
This is an S&P bond spread. I'm going to blow it up. This is a quarterly. All right, this spread is long front month S&P futures, short front month 30-year Treasury bonds. And this is a 200 period moving average. This is a 200 month moving average. And you can see where it rolled over in October, gave a good sell signal, came down. This year in January, February, we came all the way back up, tried to retest the high, failed to trade that high, which is actually a very bearish indicator when it comes up on a multi-year swing and can't punch through the higher high. The S&Ps made a new high. They went up to 35.72, but the spread itself never made the new high. And 35.72 just happened to be a target from 2018 that was our second target that was generated in 2018. So it came up to our second target generated in 2018, and the market collapsed back to the 200-month moving average.
Yep.
All right, so now we're back into this area, waiting to see what's going to happen with the U.S. election. And frankly, I've given it so much thought, I'm not thinking about it any longer. I'm just going to trade what I see. In other words, I think if we break enough, I'm going to get long because I think they're going to reflate the economy. And if we rally up and can't get over this level, I'm going to sell the market. And it's just as simple as that. Until I get a couple of closes over this area, I won't elect new upside price targets in the S&Ps. So to give you an example, if I we close twice over this line,
yeah,
I'd be looking for almost maybe a 700 to 800 point S&P swing to the upside.
Wow.
But in the meantime, we're going to have to see what the lower retests are going to be like. So I think it's an instrument specific trade right now where certain names are going to do well and others just won't. So the people in our room are just trying to make money and not really get married to what's going to happen with the election because it's just too hard to call for us.
Okay. And what about like looking at more medium term, longer term? What are you seeing? And also maybe by sectors, what are you seeing currently?
Yeah. So here's a quarterly chart, and it even gives you a bigger view. It tightens up the view of what I'm talking about. So it really hasn't done anything. Currently, what looks good to me are people are still reaching for yield. You know, the utilities are back up here at multi-quarter closing highs. And people have been buying utilities for the last couple of weeks. Mm-hmm. They've been buying utilities and they've been buying the ag companies, which our friend Ira Harris has been on, and it's been an unbelievable trade.
Some of which all
Archer Daniels, and now we're up at a multi-year high close. The high yearly close was in 2014, and Archer Daniels at 52. If you start getting a couple of closes over 52 on Archer Daniels, it'll go again. So for me, this is an area where the market has to show me that it's got more strength and follow through. It's not a place that you just go out and buy a company. You have to give it a little time here. And I think all this will play out through the election going into year end.
Associated agricultural commodities in the commodity space, are they also showing similar patterns?
Yeah. What's interesting is it's the rice that acts well. You know, the corn's been a great trade. Now rice is starting to pick up. Cotton's picked up. Soybeans have had a good run. Soybeans have had a great run in terms of real. Corn's had an interesting run. And if you factor in trucking and transportation, corn is actually trading over $5 a bushel in a lot of places in the United States. So if you want corn for feed, there are a lot of places right now in the Midwest where you have to pay over $5 a bushel for it. And eventually that'll start hitting meat prices. because
And
it just gets too costly to feed the cows.
yeah, yeah. So do you see this on the indicators as being even a longer term trend, multi-month?
Well, I think it's going to be grains are always demand markets and weather markets. The Chinese are buying everything they can get their hands on right now. And if they have problems in South America and they have a bad growing season, supply is going to get tight again. And I think some of the research I read was that it's actually Canada that's best positioned to feed people with global warming.
Oh,
Because your growing season is going to get longer.
commodities like industrial metals or precious metals?
I'm still friendly to the gold. But it's been a hard trade lately because gold went up on all the QE. And that spigot's been turned off. So I think gold's just consolidating in an area here, and it really needs over about $1,950 to get going. Here's an active monthly continuation. It still acts well, and it's not really breaking, and it's just basically in a holding pattern right now, waiting for the next round of stimulus. And we also have an ECB meeting on Thursday, so maybe that'll get it to go.
Interesting. And what about for silver, likewise?
Well, it's actually not so much the gold and the silver that's interesting. It's Bitcoin. All right. Now, Bitcoin is basic. Here, this is basically a 618 retrace. So it's basically 2/3 of the way back for the life of Bitcoin. This is the 2019 high. What set this off was PayPal is going to start making Bitcoin exchange available either via PayPal app or via PayPal credit cards. So what this demand has done in this rally is then it creates a demand from Visa, MasterCard, everybody else needs to get into this game. So that's what's pushing up Bitcoin. And you also have the central banks that want to control it. And everybody is going digital, especially with COVID. And in particular, the Chinese, who really don't use money anymore. Everything's done off their phone apps. So this becomes an interesting trade. And I have some of the people in my room have been using, some of the registered investment advisors have been using the Grayscale product for a long time to invest for their clients. And they've always had a small percentage of ownership in Bitcoin. It's just part of their overall portfolio. Gold, silver, and Bitcoin.
Interesting. And what about on the industrial metals? Can we look at copper?
Okay, here's copper. There's the monthly copper. And copper acts great. It didn't break anywhere this last time down when we went risk off. It's still holding up relative to the other metals. Even when we broke, it rallied against the long end of the treasury curve, which was interesting in itself. What's that build? Okay. So this is long copper, short US treasuries. So when you see a pattern like that where it's long copper, short US Treasuries, that's even more bullish. The people would rather own the metal and than rather hold a long-term debt instrument.
Yeah. Any correlation of copper with the US dollar?
I look at, let's see here. All right, let's go to the copper chart. And one of my favorite ones to look at is really copper yuan. When copper starts, I like to buy copper when it's strengthening against the yuan. That's really bullish for me. So I like to either look at it in yuan or divided by yuan to see how it's trading. That's a really good indicator. And since copper is going to be a big part of this whole clean energy revolution, this is a strategic long. So this is something you really want to keep your eye on and keep trading it from the long side on the breaks. The other commodity we were talking about, the other metal is platinum. I always like to look at platinum versus dollar yen, because platinum was a big part of the car industry. Everybody traded it versus the yen for years. So it's always a really good indicator. The platinum itself is just in this big digestive phase, and it really doesn't show you much. So I like to break out these individual, whether it's a stock index, whether it's a metal, whether it's a grain, I like to look at it denominated in other currencies to see if there's anything of interest. If I'm going to trade gold, I want to see what gold looks like denominated in euros. I want to see what gold looks like denominated in yen. So these are that's just part of my studies every day. When I start looking at different instruments or different commodities, I like to spend the time to thoroughly dig into it, to see how they're trading, particularly against other demand currencies.
And what about for the US dollar? Are you using that as an indicator or a correlation with any asset classes?
I try not to look at the dollar index because it just doesn't show me what I want to see. I like looking at the individual currencies. And the most important one is obviously the euro, okay? So let's just take a look at the euro. In 1999, the opening range of the euro was basically right there, 119.19. This is where it opened up in 98, 99. And this euro that you see is the current euro charts that you see are extrapolated from the D-mark. So you don't see the actual first tick, but that's where it was. So if you're looking at where we are over the last 6 years, all you're hearing is people talking about the dollar's going to do this and the dollar's going to do that. And they have no concept of what the dollar is or where it's been in relationship to, where it's been in the past. The conversation doesn't make sense to me because the euro is right back to where it started out at in 1998. So it hasn't really done much. You had a couple of really big moves from 2000, 2007 and 8. Then it devalued again. Double bottomed in 16, 17. This is another move that I recalled, and it took a year for it to work. And then it went back to 125 again and came all the way back down. And now we're just back up into the mean. It hasn't done anything yet. And people lose sight of the fact that they don't put the dollar into perspective when they look at it. The pound's done something, but the euro hasn't. The pounds have had some gigantic moves. There's Brexit. Then it came all the way back up, and now it's just hanging around here. But this low was basically, the low I think was 103.65 or 85 in 1984, 1985. See, people have to take a 40 or a 50-year look at the currency to get some perspective on it. So the current conversation about the dollar, to me, is senseless.
Now, what about on commodities in general? Do you see any indications of an emerging bull market in commodities, given that they're at historical lows?
Well, I think you've already had a pretty good move.
And
you've had a really good move in the grains. The meats have had a couple of monster moves. There's the cattle.
Yeah.
This is just kind of in a median range right now at $1.04. The beans, you have to go back and look at these in totality. We've had a pretty good move this year. We had a $2 move in the soybeans. That's a pretty generous move in a year. It's not all the time that you get these huge, $7, $8, $9 moves in the grains.
And
cotton's trying to pick up a little bit.
Yeah. Other commodity sectors as well, other than the agricultural commodities?
Well, the oil, I think, is done. Here's the oil. I don't think it's going anywhere.
Mm-hmm.
You can see what it did this year when it went negative. That was a negative $40. Now it's parked. It's going sideways. It's not doing anything. This could go sideways for a long, long time before this has another move. Mm-hmm. And here again, I like to look at the crude based in let me spread this up a little bit so you can see it. In yuan or in rubles. It gives you a little bit better perspective. A lot of times, if there's big demand out of China. You're going to see it in this chart. And with COVID basically locking down the entire world and nobody traveling, I don't think oil's going anywhere for a long time.
Mm-hmm.
There's oil versus the RSX, the Russian stock market. Lumber, we caught the lumber this year from down in here. I thought it was going to 9, I stated it was going to 9, it went to 10. And I gave you the date that it was going to go there on. And that was a typical supply squeeze. And then that collapsed. So commodities have seasonal patterns that are very tradable, but that's over with too. So I think that's going to digest for a while.
Interesting. And a final question would be on the bond markets. Anything interesting there you're seeing?
Well, let's go back to this other screen. One second. Okay, here we are, the 30-year bonds, Richard.
Mm-hmm.
We're on the right screen, right? So a couple of days ago, we didn't quite get down to as low as I would have liked, but we were within a point of a major area that I had. And we had identified this 157 level in the TLT, and most of the RIAs in the room all bought TLT going up into this area for a move back to the 200-day moving average in it. So we've been actively and Ira traded it too. He's been trading the steepeners. Here we are. Here's the 530s had a really good move. It's a very tradable pattern. And for the last few days, it got a little rich up here, and we started coming off again. Let's see what we, there was something I saw on a monthly chart right here. Well, this area on the weekly, and then we went to a monthly where we went the other way in these spreads.
Okay.
But they've been interesting. Everybody's one way. The biggest bet was in the Dece Eurodollars. Somebody made a $1 million bet with 650,000 puts for next year for rising rates that would pay out 50 to 1.
Wow.
And then that was pretty much right after they did that. There were 2 days down in the 30-year bond and the long end of the curve, up in rates, and then we reversed. So that's the bonds have been a really hard trade because people want to trade them, but it's hard to believe that rates are going up with the amount of debt that they're going to print.
Yeah, exactly. Yeah.
So from a trading stand, basically, I've just had a trading mindset because I think the early part of the year has been a lot easier, and the next 2 weeks are going to be busy. Mm-hmm. And there's so many ramifications to the election that I haven't quite wrapped my head around, then I'm not making any big bets, period.
And after.
And after, that's another story.
Yeah.
You know, I've got a methodology, and when my methodology lines up,
yeah,
I'm just going to trade. I don't need to know any more than that. I don't need to have to know why. I just have to see the numbers. When the math lines up, I'll trade the math.
Yeah. Well, it's been great insight, Judd, into what you're seeing. How can our listeners learn more about your work?
You can go to whitewavetradingstrategies.com and put your name and email in, and you can join the room for a month and see what we do every day. I write at night and in the morning. And it's fairly brief. And we have people from all over the world that join us for global macro conversations during the day. And we try to ferret out ideas and technical levels and risk reward.
Great. Thank you so much. It's been quite insightful.
Okay. Thank you very much.
Thank you.
The FRA Roundtable Insight Show is for informational and educational purposes only and should not be considered as a solicitation or offer to purchase or sell any securities. The investments, investment strategies, and investment philosophies discussed or presented on the show each involve their own unique risk factors which are not discussed on the show. Any discussions among the panel participants or responses to listener inquiries are based on the personal opinions of the panel participants and do not take into consideration the listener's suitability, objectives, or risk tolerance. Please be advised that you invest or speculate at your own risk.